Hello, and welcome to this week's episode of Lunch and Learn Live with Lynn. I've got my Her Retirement hat on because, after all, this is the Her Retirement YouTube channel, but also because I'm having a bad hair day, and that's why I love baseball hats. They also protect you from the damaging effects of the sun. So, yeah, one of these YouTube lives, I'll have to model all of my baseball hats because I have a lot. I love wearing them, and they're practical and they can be kind of cute, especially when it's got the name of your company on it. But anyway, welcome. And today we're talking about a topic that a lot of people don't totally understand. And it has to do with taxes, it has to do with Medicare, and it has to do with Social Security. So it kind of overlaps all of those areas. So I think it's important for people to understand it because it can be one of those, oh, I didn't see that coming. And so our job at Her Retirement and the financial advisory practice I co-own called Your Retirement Advisor, our job in both of those entities is to help protect people like you from these blind spots. And clearly, this is a blind spot. A lot of people don't understand it, don't understand the potential impact of it. So, I'm going to cover some high level overviews of IRMAA today, income related monthly adjustment amount. It's a mouthful. Another wonderful, somewhat complicated gift from our government. But basically, the high level, what is it? The IRMAA is a surcharge that some higher income earners pay in retirement. Now, I won't say earners because, of course, working and earning money affects it, but you can have income from taking money out of your retirement savings. So it's not just earned income, it's lots of different sources can impact the Medicare premiums that you pay. So IRMAA is a surcharge on that premium that you pay. In fact, many people get surprised when they get a letter in the mail saying, guess what? You are over the IRMAA limit. You have to pay more for your Medicare. And they go, what? In fact, at Your Retirement Advisor, a very new client called and said, hey, I'm just starting to onboard with you all. I just got a letter in the mail saying that I have a $500 surcharge, an IRMAA surcharge. Can you help me figure this out? So anyway, those are not nice surprises. And, in retirement, you're going to have a budget. You're going to have an expense budget. You're going to have, money going to different line items. Of course, Medicare, healthcare is a line item. And if you can avoid paying this surcharge by doing some tax planning and some other strategies before, you can come to us after because it adjusts every year. But if you can avoid it altogether, why not, right? It's just another strategy that many people should deploy in order to pay less to the government. Like this is some ways you can pay less. So why not, right? This is about keeping more of what you have. So with the keeping more of what you have, we like to educate people about what IRMAA is. So today, as I said, I'm going to go 20 or 30 minutes giving you a high-level overview of IRMAA. And I need these because now I do need reading glasses. And I invite you all to, after this, go check out it's like 90-minute IRMAA webinar where our certified IRMAA planner at Your Retirement Advisor, he goes into the details. He is IRMAA certified planner, which means he has done the certification and knows IRMAA inside and out. And he gives a webinar that I co-host with my partner, Brian, on IRMAA, all the details. And then of particular importance, he spends a good amount of time talking about what those strategies are. I'm going to touch on them just as a summary today, but if you go check out the IRMAwebinar.com, it's IRMAA, IRMAA webinar.com. You can go watch that on-demand webinar at your convenience. And when you get access to the webinar, you get access to the guide that I'm going to be referencing today. There are some charts that help you understand the brackets for IRMAA. There is a sample case study. There's also an appeal letter, because I will describe some situations where you may be able to appeal IRMAA. And so there's a sample IRMAA appeal letter in that resource kit too. So in addition to the webinar, you get access to the resources. But let's jump into it today. And then after I go through some of the high-level overview of IRMAA, I'm going to share some questions in a quiz that you can also access, that we've put together, that helps you identify whether you potentially might be in IRMAA. So let's jump into it. So like I said, IRMAA is an abbreviation commonly referred to as the income-related monthly adjusted amount. And it's just an additional fee imposed on your standard premiums for Medicare Part B and Part D, okay, B and D. Unfortunately, it means you'll have to pay extra for some extent of coverage, simply because your income is over the brackets that they've identified in retirement. And some people think, oh, well, I'm not going to earn enough in retirement to be affected by IRMAA, but people are surprised at things that they do, previous to retirement and in retirement, that can impact their IRMAA surcharge. One of those is RMDs, required minimum distributions. So, RMD ages have been pushed out, but people in those 70s, if they don't understand IRMAA, they get a big surprise in their early 70s when RMDs kick in and they say, oh, I got to start pulling this money out. It's going to increase your MAGI. It's going to potentially kick off IRMAA. But there's some things people can do to avoid that. Okay. Essentially, IRMAA is a form of evaluating eligibility based on income within the Medicare framework. And so the challenging part for retired individuals who have, larger earnings or income sources in retirement is that their Medicare premiums increase once they surpass these brackets. And additionally, the Social Security Administration gradually raises premiums as income reaches certain thresholds. Now, IRMAA is paid out of your Medicare if you are already collecting Social Security. So that's what happens. People get their Social Security check, and if somehow they miss the IRMAA letter, they go, wait, why is my Social Security reduced? Like, this is crazy. Well, that's because if you're collecting Social Security, IRMAA is automatically taken out. If you are not collecting Social Security, you get a bill not from your insurance provider, but from the federal government. They will send you an IRMAA bill. Okay. Just real quick, because if you go watch the webinar and you get access to this guide, you can see all of these brackets. I'm not going to spend time on this live talking about these different brackets, but just as an example, if you're filing individual and you have income of $103,000 or less in 2024, your Part B premium is $174.40 as an example. Okay. If you're in the 103 to 129 filing individual, your Part B premium goes up to $244.30, and your Part D surcharge is $12.90. And if you are, let's say, in the $193,000 to $500,000 bracket individual, or $386 to $750 filing jointly, your Part B premium is $558.70, and your Part D surcharge would be $74. So you can see that an extra $500 or $600 a month is quite possible. Okay. So again, you can go see all of those brackets. People say, well, how is it calculated? This is one of the most puzzling aspects, because this additional cost is based on modified adjusted gross income, or MAGI, reported on your tax returns from 2 years ago, because they're behind 2 years, basically. For example, your 2024 Medicare Part B and Part D premium amount is based on your MAGI, your modified adjusted gross income, in 2022. Okay, so whatever your Maggie was in 2022. So people that start Medicare are 65 and they're going to look back at 63. So you may have not even been retired. So your first year of Medicare, you could be hitting that IRMA premium. Let's see, your 2025 Medicare Part D and Part B premium will be based on 2023, as an example, 2 years in arrears. Okay. So in other words, tax planning, because tax planning can reduce your modified adjusted gross income, tax planning or the lack thereof that you do today may influence the amount you pay for Medicare 2 years from now. All right. So there are things you can do, even if you're already retired, that could impact or help you avoid any IRMAA surcharges. Okay. There's a bunch of information here on how to calculate your modified adjusted gross income. So you can go read about that. You'll learn about it in the webinar at irmawebinar.com. Highly encourage you to spend some time, maybe after the Olympics gets over, to watch that webinar. But it is available on demand anytime you want at irmawebinar.com. All right, so now I want to touch on a few other things. It's really important to pay attention to your income because these IRMAA Medicare brackets work as what's called a cliff. So even if you go over your bracket by $1, you are subject to the next IRMAA Medicare bracket. So for example, if you file your tax return as married filing jointly and your Maggie was $206,001 in 2022, your 2024 Medicare Part B premium will be $244.60, and your Medicare Part D premium will be $12.90 versus the $174 for Part B, just because $1. Had you reduced your income by $1 and had a Maggie of 206 versus 206 and 1, you would have paid $69 less per month for Medicare Part B and $12.90 per month less for Part D. So you would have saved yourself $70 to $80. And that's just a super, simple example to show you how the brackets work and why there's that cliff, just going over $1 in the bracket. So over the course of the year, that additional $1 of income caused an additional almost $840 in Part B premiums and almost $155 in Part D premiums for almost $1,000 increase. All right, so you can look at more of this information in the guide that's provided when you sign up to watch the free IRMAA webinar at irmawebinar.com. One of the questions is, all right, well, I'm going to get a Medicare Advantage plan and avoid IRMAA. Well, you can't. You can't switch from original Medicare to Medicare Advantage to avoid IRMAA. You may be able to reduce your costs with a Medicare Advantage plan, but that may come with restrictions, less accessible medical care, and potentially higher costs down the road. Now, if you are already collecting Social Security, as I said, paying Medicare IRMAA surcharge is easy, automatically deducted from your Social Security, although may be deducted at a higher amount than you were anticipating. If you're not collecting, the government will send you a bill. The surcharge is not paid to your insurance provider. It is paid to the government as an extra tax on higher incomes in retirement to help support the Medicare program. And then they give you different ways to pay. Now, I talked about appealing. So you can appeal IRMAA under certain life-changing events, okay? And like I said, in our resource portal that goes with the webinar, we offer an appeal, a description of the appeal process and a sample appeal letter. But these fall into different categories: death of a spouse, marriage, divorce, annulment, work reduction, work stoppage, loss of income producing property, loss of employer pension, receipt of settlement from a current or former employer. A common scenario that warrants consideration for an appeal is when someone enters retirement. And it's reasonable to proceed with an appeal when a recently retired individual experiences a significant reduction in income during the year of retirement. Basically, the new retiree needs to compare their current income to the income assessed based on that 2-year review period. Okay. I want to give you a quick example. And again, this is in the guide, but I'll go over it now. Let's look at a guy named Bob. Okay. He's 65 years old. He's married to Cindy. On January 1st, 2023, Bob retires from his high-ranking position at company CSX. In 2021, 2 years prior to his retirement year, Bob and Cindy had a modified adjusted gross income of $450,000. However, now that they're retired, they anticipate their income to be $250,000, which will be derived from Bob's railroad retirement, Cindy's Social Security, and their combined pensions. So what advantage would appealing the Medicare surcharge offer? By appealing, Bob and Cindy can effectively reduce their Medicare premiums by around $200 per month, resulting in about $2,400 a month savings for the year. Their revised premiums would amount to $329.70 per month compared to that original amount of $527.50. Okay. However, that sounds great, right? However, let's consider what will occur in 2024. Okay. The year after retirement. Regrettably, okay, the Social Security Administration will examine Bob and Cindy's income from 2022, which was also $450,000 in terms of their modified gross income, or MAGI. Since there is no life-changing event to report any longer because they reported it in 2023, Bob and Cindy will be compelled to pay the elevated IRMAA rate of $527.50. What if Bob decided to retire in the middle of 2023? Well, that might be more advantageous for him to postpone filing the adjustment until 2024, when he will have a complete year of reduced income. So regardless of the exact timing of Bob's retirement in 2023, by 2025, Bob and Cindy can be assured that Bob's increased earnings will no longer be a factor in affecting their situation. Okay. So like I said, there are some ways, and I provide an overview of the appeal process. There's a small section in here and an appeal letter, but just understand that it's for that first year. Okay. So people say, all right, so what are the ways that I can do some tax planning and I can reduce my modified adjusted gross income so that I don't get the surcharge? That's where the rubber meets the road, right? Going to go over those. But again, in the IRMAA webinar, there's a lot more detail on this and some case studies. And then what's really cool is when you take the webinar, you are offered a complimentary assessment so that you can take a look and understand, like, okay, I may be subject to IRMAA. What impact will this tax planning have? And what does it cost? And you can look at the cost benefit trade-offs. But some of the ways that you can reduce this is tax efficient withdrawal sourcing. Okay, the source of your income derived from investments and retirement accounts has an impact. Okay, so you may withdraw funds from a Roth IRA or sell securities from a taxable brokerage account. This tax-free income in these cases will maintain your lifestyle unaffected, allowing you to significantly reduce your income for IRMAA calculations. So if you have a Roth IRA, that's one way to avoid this because it's tax-free and doesn't affect your MAGI. And so that's why Roth conversions done at the right time are such an important strategy for some people. Now, Roth conversions, the IRMAA benefit is not the only reason to do a Roth conversion. So there's lots of other benefits to this tax planning, but a lot of people, even CPAs, a lot of advisors don't understand that there's this thing called IRMAA. And by doing Roth conversions, you're also potentially avoiding IRMAA. There's charitable giving, there's delaying Social Security. I talked about Roth conversions. So there's a number of strategies. Roth conversions are particularly important as tax strategy because the lower tax rates today, the Trump tax rates, are due to sunset at the end of 2025, and we don't know what's going to happen with those. If you have the same level of income today as in 2026, you will likely be in a higher tax bracket. Plus, if you can reduce your future RMDs, right? So required minimum distributions, that's when the government says, okay, you've had your accounts in tax deferral status for years. Now we want our tax money. If you can reduce those RMDs, you may be able to lower your MAGI and subsequently your Medicare IRMAA bracket later in life. All right, so multiple benefits. Additionally, one other point I want to make, because this is a big one. After the death of a spouse, your income in a similar amount. After the death of a spouse, your income is often a similar amount. But tax brackets and Medicare IRMAA brackets are often compressed for surviving spouses. Surviving spouses could find themselves in higher IRMAA brackets for life because of RMDs, Social Security, and other income. So it's important when you're doing these projections and tax planning that you look at the scenario of, okay, we're married, happily married, whatever, unhappily married, whatever it is, but one of you may pass and you will be the surviving spouse. What impact does all this have on you as a surviving spouse? So you need a plan A for married up, and you need a plan B for single, because 80% of women die single. All right. There's some great information in this guide on Roth conversions. Want to note a few other things before we finish up today. IRMAA brackets are adjusted by inflation each year, okay? Except the very top bracket, which won't increase until 2028, because let's make it more complicated. This means that they can go up or down. In 2024, both the IRMAA brackets and Medicare Part B and Part D premiums increased, and Medicare is inflating at a higher rate. The cost of Medicare is inflating at a higher rate than Social Security. All right. Reducing your IRMAA surcharges requires a mix of skill and knowledge. And 7 million IRMAA letters were sent out in 2023. Okay. I think that's about 25% of people that were turning 65. So in 2023, the government generated 7 million IRMAA letters. In 2024, that's projected to be 8 million. And because 10,000 people are turning 65 years old every day, by 2031, there will be 14 to 15 million letters going out. Okay. So like I said, why not keep more by implementing some strategies that lower your modified adjusted gross income, lower your taxes, lower your Medicare. So tax planning represents a huge opportunity to squeeze more juice out of your retirement lemon, as I like to say. Another statistic is IRMAA bracket surcharges between 2025 and 2033 will inflate by 14%. And in 2023, the government received 23 billion with a B, 23 billion in surcharges. So this is a bunch of people that didn't do any tax planning because they probably didn't know about it, or they had an advisor that didn't tell them about it. The right advisor for you understands these blind spots, understands how to avoid them, how to protect you, how to help you keep more. And so many advisors just aren't aware. They're not retirement trained. You know, your guy at Fidelity might have done a great job growing your assets, but what is he or she doing to make your retirement better, to help you keep more of your hard-earned money? That's what you need to ask yourself. So think about that. If you want to be one of the 8 million people getting an IRMAA letter. I'm from Massachusetts. We don't say ours. We say letter. Anyway, I want to go over this quiz with you. And so you can take this quiz. I'm actually just in the process of finalizing it. It's going to be part of the IRMAA webinar. So when you go to irmawebinar.com and you watch the full webinar and you have a certified IRMAA planner, Anderson, educate you about these strategies, because it's one thing to understand what IRMAA is. It's another thing to understand, well, what are some strategies that I could deploy and what would my outcome be? You can take this quiz to see if you should be concerned about IRMAA, and then say, you know what, yeah, it looks like I need to be concerned. Then you can go on to step 2, because every student of the webinar gets a complimentary IRMAA assessment. So you provide some basic information, and then a certified IRMAA planner like Kent or Anderson, they do an assessment. You have a quick call and they go over your IRMAA situation and some strategies, and they talk about some extra tax planning things that you could do, because heck, why not? While we're reviewing this, we might as well review all of the tax planning opportunities that you have to keep more, like Roth conversions. So let's do this quick quiz to wrap up today, because I try to keep these under 30 minutes. As you approach retirement, it's important to understand your Medicare costs, number one. And then, if you're going to get this surcharge because of some of the things that you do when you're 63, 2 years before, or each year thereafter, right? You have to pay attention to what things you're doing that can trigger this surcharge. So let's do this quiz real quick. What is your current filing status? So you answer single, married, filing jointly, married, filing separately, or other. Question 2, what was your modified adjusted gross income, MAGI, 2 years ago? So there's A through F. So again, it's helping you self-identify where you are in that MAGI bracket. And again, in that guide that I just was talking to, there are the brackets. Question 3, do you expect significant changes in your income during retirement? So lots of things can affect your MAGI. Again, it's in that guide. Yes, it will decrease significantly. Yes, it will increase significantly, or no, it will remain about the same. Okay. Question 4, do you have a Roth IRA or plan to convert traditional IRA assets to a Roth IRA? And note, in tax planning, looking at when those conversions should be done is very important. And there is strategy around when those Roth conversions should be done and what the impact is. So I've heard of people going, oh, I'm going to just do all my Roth conversions this year, and they're just kind of winging it. Well, I don't believe winging it is a good plan. It's actually not a plan. You need to have a plan, and it should include this tax planning and looking at Roth conversions and what impact. And if doing a Roth conversion, maybe you won't be in an IRMAA bracket, but you still should consider Roth conversions for other purposes, right? To keep more of your money in retirement, to pay less to Uncle Sam. It's just a way to keep more of your hard-earned money. Question 5, do you anticipate large capital gains in the next few years? So we ask these questions to help you think about, because we don't know, but we want you to think about what things might trigger your MAGI and your IRMAA premium, your IRMAA surcharge. Are you familiar with qualified charitable distributions? And do you plan to use them? Because that's another strategy. Do you plan to manage your income to stay below IRMAA thresholds? Now, once you take this quiz, if you answered mostly A's and B's, you may be at risk of falling into the IRMAA brackets, and therefore you may want to consider doing some tax planning and having an IRMAA certified planner take a deeper dive into your situation to protect you from IRMAA. So just to wrap up today, some strategies to manage or avoid IRMAA. Income management, keeping your MAGI below the IRMAA thresholds by managing your withdrawals, that withdrawal sequencing, and your income sources very carefully, and paying attention to single versus married, divorced, widowed. Roth conversions, converting your traditional IRA assets to Roth IRAs before retiring to avoid large required minimum distributions, because those RMDs can affect your Maggie, increase it, which in turn can increase your IRMAA. Now, some people go through this and they go, oh, I'm okay for like the first 8 years. You retire at 62, 65, whatever. Say you get to 65, you start Medicare, you're good. 65, 66, 67, you're not taking your RMDs. It says early 70s when RMDs start, that could be an issue. So it might not be an issue in your 60s, mid to late 60s, but early mid 70s, that's where it could be impactful to you. Tax loss harvesting is another strategy that offsets capital gains by selling investments at a loss and staggering your withdrawals, spreading out withdrawals over several years to avoid spikes in your income. So to wrap up today, this was just a very high-level overview of IRMAA, taxes, and Medicare. Last week in my live, I did a deep dive on Medicare, on understanding Medicare, because I do offer a Medicare webinar so that you can get educated about Medicare. I touched upon IRMAA. But if you would like to really learn more about IRMAA and specifically understanding the strategies and see a couple case studies for how doing some tax planning and having an IRMAA certified planner look at this for you, do an assessment, go to irmawebinar.com. You'll get access to this guide, you'll get access to the quiz, an appeal letter, and a few other resources that are very helpful, we found, to a lot of people. So again, definitely reach out to me though if you want to, I don't want to take the webinar. I'm good. I'm worried my income is going to be higher. I have no idea what I'm doing for tax planning. Reach out to me because I'll get you connected right away, and you don't even have to watch the webinar. You can just go enjoy the rest of the Olympics. But anyway, if you want to watch the webinar, go to irmawebinar.com. And then if you want to reach out to me because you want to get that IRMAA assessment now, and you want to start some tax planning conversations and some IRMAA avoidance, you can email me at lynnt@herretirement.com. It says on my hat, lynnt@herretirement.com, and we'll hook you up with an assessment, see what's going on, see how we can help you keep more of your hard-earned money. That's what it's all about. We have these strategies. We might as well try to see if they can help us and squeeze more juice out of those lemons. So thanks for watching this episode of Lunch and Learn Live with Lynn, where we talk taxes, Medicare, and IRMAA. All right, here's to avoiding it. Here's to knowing more, having more, and getting her done. Thanks for watching.